And welcome back. If you're just joining us, this is your home of business, KTN Financial Markets Live. My name is Monyoncho, and it's time to have that afternoon business chat. And today, just before we break, I gave you an update of how your money is doing at the NSE, and I bet many people do not understand what exactly I was talking about. And I'm joined in studio by a gentleman who will be able to break that down for us. His name is Ken Monyoncho.
Thank you.
Ken Monyoncho, you've written a book about investing in the NSE and saving money for investment. What drove you to write such titles?
The first book I really wanted to write was on how to invest in the financial markets.
Yes.
But as I told people about investing in the financial markets, the first question they asked me was, show us where the money is. How can I make that money to invest? So I was tempted to say, look, you know what I need to do is to write a book teaching Kenyans on how they can actually save some money. And that's why I wrote the first book on how to save money, which is this one here, how to save money for investment. Once I wrote that book, it then was able to give people impetus.
Oh, so you told them where the money is.
So I told them where the money is.
So
go get the money, at least 1 year or so, put aside some money, follow the instructions given in this book, save that money. After 1 year, and you've set apart some money, then you can now get the second book, how to save, how to invest in the financial markets. Now,
let's go back to the first book.
Yes.
What are some of the issues that you tackled in terms of how to save money?
Now, one of the most important ways of saving money is learning to recognize that you are the source of that income.
Correct.
Without you, nobody else would get paid without you. So what I mention in this book is you need to learn to pay yourself first.
Yes.
Usually we pay the landlord, you want to pay for fuel first, you want to pay for your groceries first, you pay TV subscription, and then you forget to pay yourself.
Yes.
And yet you are the key person in the whole process of earning. So what you need to do is to recognize that out of what I'm earning, I need to ensure that I pay myself a certain extent. Probably the minimum is 10%. So if you're earning 30,000, 3,000 is what you pay yourself. That is the money you can accumulate.
When you say pay yourself, I'm thinking, if it's pay myself, I'll put aside my 3,000, walk to the nearest bar and pay myself. What exactly do you
are not the only one. You're not the only one. In fact, I had a seminar on Monday where people were saying exactly what you're saying. Now, paying myself first is setting aside some money that I can invest to be able to make money for me in future.
All right.
As it is right now, paying yourself first, if you want to go to a pub and drink, or you want to buy yourself, take yourself for a treat, you can do that from your budget.
Okay.
But in terms of my future income, the purpose for which all of us are working, I believe, is so that we can make money. If we can make as much money as possible now, that we can invest today, the day we are not able to work, that money will work for me.
Okay.
That's what it means to pay yourself first. That money is going to work for you in future. As it is right now, most people do not do that, and therefore they don't have any money working for them for the future. Yes.
What other avenues apart from, you get your monthly
pay yourself
pay?
first? Yes. The second one is you need to have a budget.
Yes.
A budget helps you to know where your money is going. Because if you don't know where your money is going, there's no way you can save anything.
Correct.
And most people tend to have budgets in their minds. They do not have anything written. It's all in the mind. But that's a very dangerous place to start. If you've been having a budget for a while and you've been practicing it, it's easier to have it in the mind, yes. But until you get there, it's important you have it in your mind. The reason being, if, for example, you are spending every day, say you're taking a cup of tea, I don't know, 50 shillings or 60 shillings. For a whole month, if you multiply 60 shillings for a whole month, it's about 1,800 shillings. If in your budget, you can comfortably put tea for the month, 1,800 shillings, then you put it there. But most people, when you tell them that's how much you spend, they get shocked. They say, but that is the truth. You've been taking tea every day, and yet it's not in your budget. But you know you're taking it. But once you realize by writing down where your money goes, then you are able to know, how do I stop it from going there, especially if I don't want it to go there. So the second thing is you must have a budget that you can work by. Yes.
Good. So we have a budget.
Yes.
And we've paid ourselves.
Yes.
We want to put this money at the stock market.
Yes.
How do you do that?
Now, investing in the Nairobi Securities Exchange is not very difficult. I worked there for about 2 years, and before going there, I also didn't know what was happening. All I knew, I used to hear some language called shares, but I didn't understand what it was. It was not until I started working, I realized that many people were making money in the stock, in the securities exchange, but not very many people knew about it. I was a bit shocked. I realized, how come I've not heard of this? I've worked for over 16 years. I've never heard that I can invest. And really, that was the other motivator.
You're clearly in the wrong industry.
Yes, I said, no, there are some people who are benefiting and I'm not.
Yes.
And that's what really motivated me to write a book.
Correct.
That it's important to share this information with people. Now, what you need to do if you're investing in the Nairobi Securities Exchange, really, the current regulations state that you can just buy as few as 100 shares or as little as 3,000 shillings. Now, that is very affordable. If you look at probably one of the cheapest shares is cheaper than a sweet. If you buy a big G that's going for about, I don't know, 5 shillings.
Yeah. There's shares for 3 shillings.
By the share going for 3 shillings and 50 cents,
yes.
a share is going for a shilling and 60 cents. You can do that. But for you to do that, you need to open what they call a CDS account.
Okay. And
that you can open in any firm that does transactions on securities exchange. It's free of charge. You just give your ID, your photo, and of course show them where you live in terms of just knowing your customer, and they'll open an account for you.
Correct.
Now, in terms of monitoring,
do you still need a bank account after getting a CDSC account?
You really don't need a bank account. But if you want to buy, you either take your money to the institution, either the broker or the bank. You give them the money, and they're able to trade for you.
Okay.
Regularly, you get a balance sheet, a bank statement, or a transaction statement that is telling you how your shares have done, how they have traded. Now, the institution can give you that information, or you can get what you call a statement account from the CDS itself every 3 months, telling you the status of the shares that you already have. Now, the beauty of having somebody else trading for you is that they can actually give you a record of when you bought the share. For example, if you bought the share at, say, 3 shillings, by the time you're getting a statement, the share could ideally be around maybe 350. Now, depending also on what you're looking for in trading at the Nairobi Securities Exchange, because there are people who buy shares not for trading.
Yes.
They buy to hold them so that they can rise in value, and they earn dividends from the shares that they buy. So such people just buy and keep and say, in the next 5 to 10 years, can be able to sell them because I know value will have gone up. So if you can open that account, give instructions on the shares that you want to be bought. If you feel you need to sell them, if they've made money or you're not happy with the counter, you can actually just give them instructions and they'll do the trading for you. Yes.
Okay. Now, looking a few years back, Ken, let's talk about 10 years.
Yes.
The rise of IPOs in Kenya. And Kenyans became aware of IPOs and the fact that you can invest in money. We've seen the way Kenyans for KenGen, for Safaricoms, and the Everreadys of today.
Yes.
However, with all that information out there, there's also people always complain, I do not have the enough capital, I'm not getting as much as this. What are some of the problems or some of the mistakes people do when investing at the NSE?
A research was done sometime last year, and it was discovered that about 80% of people who have CDS accounts at the Nairobi Stock Exchange, they treat the stock exchange or the securities exchange like a charity chipstick institution. What they do, they would buy a share and they would keep it, waiting for a day when it would double or triple and then sell. They are not people who do regular trading on the stock market.
Yes.
Now, when you are getting into the stock exchange, you need to have, well, in finance, we talk about having a finance policy. Why are you investing in the stock exchange?
Yes.
If you understand why you want to invest there, then you'll know, do I need to borrow to invest because I'm getting into a risky business?
Correct.
Do I need to borrow? Because that's one of the key mistakes people make, that they borrow money to invest. You would never borrow to invest. You save to invest. Because when you invest in the securities exchange, you are not very sure on when the share will rise. Neither do you know when the share is going to collapse. So when you borrow money and the share does not do well, like I think one of the communication share that was bought, what people did, they bought at 5 shillings and they thought it's going to go to 10 shillings, but it never went there. So most people I talk to, they're very disappointed.
So you need to know why.
You need to know why you are investing. You need to know how long you're going to be investing. Don't go in for the short term. Shares are not very good for the short term unless you've got very many shares.
Correct.
Yes.
Now, Ken, we really need to go. Final question. I know you're not supposed to forecast or to tell the future, but looking at the stock market, what are the best counters that you're likely to benefit if you go in right now?
The best counter is the counters that I invest in. Those are the only ones I can tell you.
Which are these?
Total, Cobank, KCB, those are my shares, and I can see them doing well. I've always been there. They've always given me a return. Therefore, anybody who's interested, well, if I lose, then they lose. But at least they've had, that's where I am.
Indeed.
Yes.
Well, many thanks for dropping by, and good luck with your book.
Thank you.